We just pop in real quick like that? I don't know. Is there a countdown? Are we live, Raj? Live? I guess we're live.
He ditched us like that, huh?
Yeah, that was dirty. Kind of did us dirty. It's cool. It's cool. I guess we are live. We were waiting for a countdown, but that didn't happen. All right. So today's show is Do Seasons Matter? And we're going to be talking about that. We're going to be talking about some other stuff like Keltner fades and then seasonal stuff. And from my experience, yes, different time periods of the market, i.e. seasons, matter a lot. You're going to have different win rates during different seasons. Volatility, headline risk, all this stuff really impacts your trading setup. So cool topic. I'm glad to kind of dig into it. So Vesh is here with us today. Welcome in. Welcome in.
What's going on, everybody?
I see that fish tank in the back. See the fish tank. It's cool looking. The fishies. Yeah. It's always weird on stream. You're like trying to point this way and you're pointing the wrong way. You're like, it's this. Yeah, this way. Cool. All right. As always, we get some likes on YouTube and we'll go ahead and do the giveaway. Hello, everyone. Hi. Hello, Paul S. D. Good afternoon. Good morning. Miss you, TFD. Oh, miss us. Miss you too. Hey, it's Josh. Oh. Wait, where's Josh? Yeah, we're live. Nice. Hit the like, folks. Yes, please, please, please. Good morning. What up? Wish you can win something today. Yeah, we're going to do a giveaway. So as always, people win. It's kind of cool. If you've won before, you guys can't win again. Remember, cooling off period. It's kind of what it is. All right. Let's get into it now that we've given everybody a little bit of time. Plus, you just took a drink, so it's perfect time to ask you a question. Let's do it. So, do seasons matter?
That's a great question.
It's an awesome question. Get into it.
Yeah, to kind of dive into it a little bit, or a lot of it in this case, they do. I mean, if you really think about it, the people that are typically moving the markets are the people with a lot of money that can actually move the markets. And typically, the people who have a lot of money, when the weather is nice outside, they usually like to go places. And in my experience, I've kind of noticed that summertime, late spring, early summertime, kind of late summertime as well. They don't need to be sitting in front of the computer, trying to make a lot of money because they already have a lot of money. So where are they? Right? They're usually on vacation or something. So if you ever notice in the summertime, things tend to kind of slow down. Now, you will have your news events and, all that stuff where, it looks like we're going to have some good implied volatility, et cetera. But I tend to notice that end of spring till about early fall is a little bit slower for volatility, just because a lot of the money is not here to help push the market, to help push that volatility. And then usually like fall time all the way until again like springtime, that's typically when you see a lot of, you hear the Santa Claus rally all the time. Well, it's because they're all in front of their computers and they're like, hey, we need to make some money. Let's make some money. And that's, I don't know, do you have a different perspective? That's kind of my perspective on it. And it always seems to hold true. It's like when the summertime comes around, I tend to get bored because, I'm always waiting for, a lot of my strategy is based on volatility. So I've noticed that in the summertime, I get a lot less trades than I do, say, the fall and the winter.
Yeah, no, I think I like your thesis. I think you're on point. It's the same thing I've noticed, over the last 6 or 7 years. And it could be partially due to like a self-fulfilling prophecy, because every trader knows like, no, it's lower volatility. So everybody's like, yeah, we're just not going to trade. But it also, I think, relates to, it is summer. And when can families actually travel if they have kids? It's during summer, because if not, there's school, there's obligations, there's work. And generally, if you look at statistics for people and like when they travel, it's during the summer. So it makes a lot of sense that the people, the big market movers that work really hard all year, end up taking a break. And then algos will just piggyback on there. They'll be like, okay, as an algo, which was programmed by a human, knows that during the summer, things move less. So i.e. their programming just fulfills, right? It's just something that feeds into itself. So yeah, there are different seasons, and you're gonna notice as you get more time under your belt with trading, season matters, and it matters a lot. And that's why you should have a data set for, let's say normal pre-summer trading. Look at your statistics and then look at it during summer and see, depending on what your strategy is, right? You're definitely going to see different win rates and stuff. So I think we're going to dig into that a little bit more with a Keltner fade and maybe the different data he sees during different time periods. So yeah, let's see it.
So this whole Keltner fade, I had kind of seen that and I was kind of interested. I thought maybe it was something that you're kind of possibly trading, because my idea of a Keltner fade, which is actually the original reason why the Keltner channels were invented, is that they will typically use them as a way of looking for market direction more so than why I use them. So I don't know if you want to necessarily talk about Keltner fades. I mean, I'm more than happy to talk about them, but I typically use the Keltner channels, which are these red and green bands on the chart. I use them a little bit differently than most would. I don't know if Raj had told you that.
Yeah,
but
you're kind of using them to like fade, right? So you're looking for like mean reversion trades off Keltner channels, which Keltner channels are more or less deviations of like the center of the mean, right? They're like ATR based, kind of, or okay. Yeah, I don't use Keltners. I use VWAP deviations, kind of the same thing. Yours are great too because they scale depending on what the average true range is. It's going to show you, the volatility in the market, which is great. You need volatility to understand if it's a good trade or not. So you use them as fading, whatever from one edge to the other or back to the mean or whatever. So yeah, people can use tools any different way. Definitely an interesting concept. I would assume it works a lot better when you have volatility, because when you don't, guess what? They probably never touch. And then that means no trades for you, right?
Right.
Got it.
Okay. So when we're using the word fade, we're more so fading it back towards the mean reversion. Okay. So when I hear fade, I think, like you're kind of using it to fade the actual move that the market's making more so. So you're looking for more of a continuation type move, but okay. It makes sense. Just to go on what Brian was saying real quick, as far as the ATR and the volatility, if we go into the pre-market of just today before the 8:30 news that we had this morning, I mean, look at the Keltner channels and look how small they look. It's because there's not a volatility going on. There's not a lot of volume there. There's nothing to really kind of push these Keltner channels open, because they are based off the ATR. And as you can see, when you finally do get some volume and some volatility going, some big price movement, look at how they expand. And so it typically, what I'm looking for is I'm looking for these Keltner channels to get hit. Now, the settings that I'm using, it took a lot of back testing to find these settings. I'm going to openly tell them to you. I don't hide these from anybody. But if you go to set them up, they're naturally going to be, I believe, on the 9 EMA. I have changed my middle line to the 13 EMA. And then by default, they're going to be on the 2 standard deviation. These are actually on the 4 standard deviation. Actually, I always find the best way to kind of talk about or show you what I mean is to just bring up what they look like normally. So if I add these onto my chart, this is what they would look like normally. Obviously, you can get rid of the inside stuff and change the colors, which I have. But the normal Keltner channels, this is what it looks like. And when I first thought of the idea of, back in the day, I knew that I was looking for volatility. How can I find volatility? I messed around with Bollinger Bands, but those weren't based off volatility. Found the Keltner channels. They are based off volatility with the ATR multiplier. So with the normal 2 times multiplier here, you can see it's not much. Like the price easily kind of shoots its way through it. It's not really telling me anything. So through several months of back testing, and I'm talking like 5-6 months of kind of fine tuning this thing, when I first came over to futures, because this is something I had kind of learned when I traded equities, but I wanted to try to apply it to the NASDAQ. So I kind of figured out what I was looking for, and I basically kept tweaking the settings until I found what I was looking for. It ended up being the 13 EMA and 4 standard deviation, or 4 times multiplier, whatever you want to call it, because I think it's different depending on which platform you're on. Yeah. But what that is going to do is, if you back test with my settings, let me go ahead and get rid of or just do this. Yeah. So if you back test with my settings, I will almost guarantee that is not 100%. Obviously nothing's 100%, but every time, even in the pre-market, it usually works like a lot, that when these Keltner channels, the price gets anywhere near them, the closer the better. And I'm going to explain that here in a second, but the closer that you can get to these channels, the higher the percentage that you're going to catch some sort of reversal short term. Now, I'm not saying you're going to get a reversal all the way back to the highs of somewhere, or if you're getting short, you're not going to get it all the way back to the lows. That's usually never the case. The EMA has been a great tool for where it usually tends to go. As you can see, even in this case this morning, at the open, went right down into the channels, went right back to the EMA, and then it kind of did whatever it's going to do. I'm looking to react to moves. I'm not looking to predict moves. That is a very big part of what I do. And I try to tell anyone who's trying to predict what the market's going to do, it's tough. I mean, there's people out there that are pretty good at it. I'm not one of them. I don't even try, because I know that my strength is finding a move that has already happened and then reacting to it, because it's a lot easier for me to see something happening and react to it than to assume something's going to happen. And then when that doesn't happen, not keep a bias of what I think is going to happen. And then, that's where, a whole different side of trading comes into play with psychology. But so why the Keltner channels and why the 4 standard deviation? I kind of explained that, we're looking for that big push that is with volatility, right? The only way you can get to these bands is if you have an out of norm type of push, right? With a lot of volume, a lot of price movement, in one direction or the other. This works to the downside or the upside. And essentially, to make this as simple as I can, think of a rubber band. I should just leave a rubber band on my desk for this. But if you have a rubber band and you only pull it just a little bit, it's not really going to have any like spring to it, right? You just let go and it kind of just dies, right? But if you keep pulling that rubber band a little bit further and then you let go, it kind of hits your fingers, right? Now keep pulling that rubber band until you can't pull it anymore, and then let go. What's it going to do? It's going to snap back and probably hurt your finger a little bit. That's the principle behind this trade. And why this works, don't ask me why. It's just from 6-7 years of staring at screens at this point that I've realized that the quicker a move happens and the further it goes, the more likelihood, the higher the odds are that it's going to give you some sort of reversal. And that's the general theory behind this. And these Keltner channels are just a way to see that, right? It's to see that rubber band and how far it's stretched. Because before I had the Keltner channels, I would find, say, a move like, let's see, I can find one real quick. Like right here, even so, another one from today. Either one of these moves to the downside. Like to me, you're looking at previous support. We had all this support here. It finally breaks. This kind of looks like it's a decent move to the downside, right? But with the Keltner channels up, does it look anything like this one? No, it doesn't look anything like it. So it really helps me identify when the market is actually making a big move versus what I think is a big move. And I guarantee if you put these settings into your chart and you just go backwards on your chart for who knows how long. Now, keep in mind, this is going to be different for every time frame. I am on the 1 minute time frame. So if you just change it to the 2 minute time frame, it's going to be completely different. But what you could do is you could load up the 1 minute time frame, see where the bands are, go to the 2 minute, and then get the bands. You can kind of fidget with the settings, which is exactly what I did. I basically went back, like I said, like at least 6 months, and I just kept doing. I went back more than that. I probably went back 10 years or so, just scrolling, but for 6 months until I got it to where basically every time there was a really big move like this that wasn't news dependent, because you gotta get rid of the news. Don't worry about news. But if there's any moves that go into the bands that aren't news dependent, just natural market flow, you'll see a very common occurrence that the price might tend to hit that channel and reverse. And now how big the range is when it does, that I can't help you with. If you're looking at these in the pre-market, you might be getting 5-10 points on a full, push to the EMAs. But here, if you got, which I took this trade actually on one of my other accounts this morning, and I got, I think like 15 points out of it. And all I got was just this quick little pullback. I didn't even go all the way to the EMA. It was just a quick little scalp. So it's like depending, and some days, that move right there could be 30 points. You never know that. And that really depends again on, like we were talking about, the seasons that we're in. It depends on the current market structure. That depends on a lot of things. But again, I'm not trying to predict anything that's going to happen. I'm just waiting for it to happen, and then I just react to it.
Yeah, and that's a big difference for a lot of people. One, you have a very structured approach, which is you can actually back test it, right? A lot of times traders will come in, and I know that they're having issues or they're struggling because they have no consistency with the way they're trading. They're very nuance based. Where your system, one, you back tested it, which is very rare for people to do. I don't know why, but they don't back test it in a way that they can duplicate those results. So one, you've back tested, you understand, and you're using it in a very specific way, right? You also know you don't trade news. And then, all these different things that you've looked at, most people don't do. So I commend you for doing that, especially, knowing where your expertise is and what methods you're looking at. The 1 minute, like you said, is different than the 2 minute because you tested the 1 minute, right? You know what settings work best, and that's through back testing. So anybody that's interested in this, don't just take his word for it. Like, load up his settings and test it and see it for yourself, because it's going to give you conviction. And as he said, it's not perfect. No setup's perfect, but there is an edge with this. So now it all is going to come down to, okay, now that I've found an edge in the market, how do I make sure that I implement this edge and it works the way I intended it? And then additionally, going back to what we were talking about, seasonal volatility, right? I can assure you he has the data for seasonal, and that's why he probably maybe trades a different strategy or doesn't get as many entries, because during the summer season, you probably just don't get as many touches. And when you don't get a touch, guess what? He can't take a trade. So he's, like he said, he's not trying to predict the market. He doesn't care if it goes up or down, but if it's at that area where he knows it's overextended, then he's looking to fade it or, mean reversion, take the trade either up or down. It doesn't matter. So he doesn't really have a bias there, which is great. That's a great system because he doesn't have those biases, and that's amazing. Great. Thank you for sharing. Let's talk, we already kind of talked about, Keltner. How does this work during the slow season? Like, do you modify it? Do you change settings? Or do you just stick to what it is? And if you don't get setups, you don't get setups and you trade something different. Like what's your go-to?
I've went weeks sometimes without taking a trade. It's just part of it.
Weeks, right? How do you cope with that? Do you get bored and be like, I need to take a trade? I don't care what it is. I need to take something.
I do it. I do it all the time. Like because I stream live on my channel. So when when it is happening, because I've streamed live pretty much every day for the last, I don't even know, 6 years now almost. Mm-hmm. I will literally say it out loud, and the self-recognition is the best part of it. Because then I can, openly tell everyone, like, guys, I'm like really fighting some FOMO here. Like, I really want to take a trade. So, and I can give you a perfect example. I don't even know what day this is from. I was just kind of back testing as Brian was talking to kind of show you how many times this happens. And we are kind of getting into that season where it happens, quite a bit. But like, I would see a trade like this and I would be so tempted to take it. But the amount of times that I've tried to get a little bit more aggressive and take it before it gets down towards the channels, I've gotten burned, because I'll start it here and then it'll just continue, and and then you're stuck in a trade, and then you're trying to fight your way out. And then that's how you end up, messing up some accounts. But I was kind of back testing. I mean, here's one here, pretty much right into the channels, reversion right back to the means. This one kind of went sideways, but it still gave you that push back up. And I think this is after hours. Oh no, this is right at market close. But like I said, even in after hours, you kind of see the same thing, but it just gets smaller. But if you just keep going backwards and you look for the actual market hours, because I don't trade aftermarket, but I mean, in my back testing, I found that if you really wanted to, you probably could. But I just don't think it's worth it because of the range. The range, it's like you're fighting for a lot less money. And that's what I was going to say. Like, where I kind of make up for it is when everything's hot and we have a good range. Like, I'm not afraid to continue trading like the same, like bigger size. So like in the summertime, like when I do get a trade, like I'll be taking lighter size, because it's like you're essentially waiting for that one move to just destroy you, right? You should always, in my head, be playing on defense, because trading in general is about keeping your capital, right? It's about risk management. Most people know they have a strategy that can probably print some money, but how do you keep that money, right? That's kind of how I look at the market. So like if I go into every trade with the mindset of where am I going to get out of this trade if it goes against me? And for me, it's a dollar amount. Like I have a dollar amount hard coded either in my head or directly into the broker or prop firm, etc., to get me out of a trade. And it'll lock me out for the rest of the day, because I know that if I get to that point, I shouldn't be in that trade anymore. And I feel like everyone should have that, right? Because that amount for me, I know that I can make back. With my strategy, it's more of a high win rate strategy. So I'm going to lose a little bit bigger when I do, but I know that I can make that back within a week, with just normal trading. So that's really key for me, because I know I can go sometimes months without ever taking a losing trade. And not every losing trade is a big losing trade. And that's what a lot of people don't understand too, because they'll always be like, well, what's your max loss versus how much you make? And I'm like, well, this is my max loss, but I don't always lose that amount when I lose. Sometimes I'll only lose like $100 or $50, or, I'll stop out at break even sometimes, depending on, how the trade's working out. A lot of that is really just dependent. But then when the market volatility picks back up, I'm not afraid to keep trading that same size to, even though the range is a lot bigger. Because a lot of people will say, well, I can only make, like 5 points on this trade max, with one NQ, that's $100. But if in the fall time we're getting a move and it's 30 points, I'm not afraid to keep trading that. And because I know that my edge is pretty much the same regardless of what the range is. So now instead of making $100, I'm making $600, if I get a full 30 points out of it. Because a lot of times when the moves are happening, I'm not looking, for like set amounts of points or ticks or whatever. Like I'm just trading the chart. So like an example, this isn't the best example, but let me draw a line here. So I'll look for key levels. So like right here, we kind of have a support over here to the left. It kind of got touched 3 times. Well, I'll be looking for a key break, which to me, this is a key break, right? You had a nice support level forming here. And then I'll be looking for that rubber band to extend through that area. And the closer you can get to those Keltners, like I said, the harder it's probably going to snap back, or the more likely it's going to snap back. And then I'll just be looking to get in to go long, and I'll just be looking for a retest of that support level. Because a lot of times what you'll see after you get a big push through a level like that is it'll come up and then it'll try to use it as resistance. And then if it wants to continue down, it will. Sometimes it does exactly this. It'll go right back up into that range. It's a little liquidity grab, but I don't care, right? Because my trade is just getting in and I'm looking for that retest. I'm out. What it does after that, I don't really care. That's not my edge. My edge is that quick little trade. Hopefully it's always a quick little trade. Sometimes it can continue. And then that's when you get into the more advanced parts of the strat where, you can scale into it to a certain extent, obviously. But sometimes, like I said, it'll just come up. And like in this case, if you took this trade, let's see, that's 15 points back up to 600. And that's even better when it's at like a whole dollar. I mean, that couldn't have worked out more perfect, honestly. I like to use $half whole dollars. So if we're getting in a little bit more advanced here, and what I mean by $half is like any 50 on the 100. So like 550, 450. I've just noticed in equities that like every 50 cents to a dollar. So the 50 cent marks and the dollars, they're like mental key areas for people. So like when you're coming back up, like, do you ever hear somebody live streaming or something, or when they're breaking down stuff, they're like, oh yeah, a lot of people are really thinking about that 583 area, just like randomly, like it's not like a key support area or anything. But if it's coming up, like say you're running higher and like if we're running up here, they're not going to be like, oh yeah, watch out for that 783 area with no like, but they're going to be like, all right, 800 is probably like a magnet, right? You hear that all the time. So it becomes like this mental either magnet, or it becomes like this mental like block for people like, oh, I'm going to wait for it to, bounce off of 600 or, so there's whole dollar, $half. It's just an added layer to the strat. But in this case, it's a break of that key area. So the odds are in my head and, the way that I think of things, it's going to retest that area at some point. In this case, it did it right away for like almost an immediate 15 points, because this is a 1 minute chart. So now would I have taken this trade? I don't know. I would have to, have been reading the price action, et cetera. It's not as close to the Kelner channels as I would like, but the range was actually pretty good. Did I take this trade? I don't know. I'd have to go back and check on other accounts.
Yeah. So kind of going back to psychological things. And I know you have a chat that you have to kind of they're your accountability buddy. But for people that maybe are waiting for their setup and they feel like, oh my God, I'm not doing anything, I feel like I need to be doing something, and then they get into these random trades, right? How do you as a trader combat that? Like, what are your methods? Do you have any actionable plans that you do other than your support system where you're trying to, you know, be the bigger person and show by, you know, example, right? How do you combat that?
I do think having the chat or the stream, like I really do feel like it helps me, because it makes me realize that I don't want to do something stupid and then everyone can see it. So that definitely helps in a way. But I think the main thing is that I just did it incorrectly I did it so many times, and it's like I knew what I should be doing, but then I would do it anyway, and I would get proven wrong over and over again that I shouldn't have did it. And it was like, I say this all the time. I could tell someone exactly what to do and they're still going to mess it up, because like they're going to get into a trade at one point and they're like, yeah, but it's probably going to still go there. And it's like, well, I just told you that that's not how I trade this. But so just them having that one thought, and it's like, it's like, how do you learn how to ride a bike? Someone can't just tell you how to ride a bike and get on a bike and ride it. Like, you actually have to ride the bike to kind of figure out, you know, how do you balance on a bike? You know, how do you get started? Like, where do the pedals have to be to start pushing forward to ride? You know, there's so many things that you're not going to learn from somebody telling you. They can give you the best way to do it and like the best tips on how to get started. But until you actually go through and live through those scenarios, it's really hard to kind of hammer it home, that you should or should not be doing something. And with me, it was and it's one of the things you hear from like entrepreneurs all the time. Like, what's the best way to learn something? To fail, right? So if you fail at something, you're going to typically remember that you failed, right? So the next time it comes up, like, even though you might do it again, you know, in the back of your head, okay, last time I did this, I failed, you know, and then you start to question yourself, well, why am I doing it again? And then over time, once you do it enough and you get burned enough, you're going to be like, okay, like I need to like make a hard rule. I can't do this anymore. And that's that. And for me, to be completely honest, within this past year, since the beginning of this year, I noticed that one of my key weaknesses was I would start, you know, trying, like, even right here, we had a nice key break. I had this line drawn off right when we started the stream. And I would have started this looking early. It would have worked. And guess what? It was working a bunch of times, but it only took like one or two times where I would start it early and then this thing would just go right into the Keltners. And then I'm like, why am I in this trade? I should have been waiting to get in here.
Yeah. Here's the other side of it too, is sometimes you'll make that bad decision. And then what do you think the market does? It's like, yeah, you were right, man. Here's some money. And you're like, oh yeah, exactly. See? And then the next time you get smoked by it, now you have like dissidence in your brain. You're like, well, you know, the time I've done it worked, and then this time just didn't, so it's okay, right? But in the bigger picture, it's like, no, that's really bad. Like, you don't want to do that. Stick to your plan. So that's great that you've recognized that. It takes a long time for people to do that, though. Like, it's funny because people get in trade, they're like, oh, you know, I'm going to be good in like a year. And it's like, no, dude. It's not just the strategy. It's like, you got to go through and like not just know what not to do, but experience so much that like you touched your hand enough and got burned enough that you're like, okay, I'm done. I feel sick to my stomach when I do these stupid things, but it takes time. So I think what we should do, we should just develop like a shock collar, and your buddy has the, you know, remote for it, and you mess up and you just, and then, you know, it'll teach people way quicker. It
really would.
Because like as soon as they do a bad thing, you're all, and they're like, okay, yeah, I'm not doing that anymore. But you know, it's tough because a lot of traders know what they're doing wrong, but they can't like stop themselves. They're like, I know I shouldn't be trading right now. It's slow. You know, this isn't really my setup, but you know what? Yeah, we're going to take it because we're bored. We need to do something. And then they get smoked by it. And they're like, oh, I should have never done that. It sucks. Trading's tough, but you really have to go through it. And the more you get burned, the less you'll want to do it, which is great. And less is more in trading. Just wait for your setups, take your setups, or else you deteriorate your edge. You don't want to do that. Let's do some questions for Vala. Let's do some questions. What would
just to add? Okay.
Go ahead.
I was just going to say, just to add on to that too, a lot of people where that tends to happen is when they're in a trade that's going against them, right? Because winning trades, it's real easy to just, you're not even thinking twice. But when you're in a losing trade, it's like something clicks in your brain that like, oh, I don't want to accept this. Like, I'll just wait for it to come back to break even. And that just keeps going against you. And then it's like, at what point do you realize this thing ain't coming back and the market structure's changed and you can clearly see it's going the other way? It's like, at what point does your brain, click that you just effed up, right? It's like at what point? And that's really
when it's too late. When it's too late,
exactly.
and you've already blown up your account, or it's funny. I found myself, I would get into a trade accidentally, and I'd like a misclick or something, right? And I would get in the trade. I'd be like, oh man, shit. And I would think, and I'd go to my mouse to like get out of it. I was like, no, I'll wait until I get a break even. I don't want to take a loss on this early in my career. And I would end up, instead of getting out at like $20 for fees or whatever, I get out like $200-300. I'm like, why the hell did I just do that? You didn't know, you just didn't want to take a loss. And it's like, that's all part of trading. It's the psychology a lot. It's crazy. It's crazy how hard trading can be when it doesn't need to be, but you need some guardrails. You need somebody to be there for you. You have an audience. So I think everybody should just start their own live stream and then maybe have 2 or 3 people watching them, and then they won't do dumb stuff, but you never know.
Well, I don't know. Some people do the dumb stuff just for their audience.
True. Good. Well played. They maybe actually get more views because of that.
They do. So, yeah. Sadly.
maybe we should start a show and just do the stupidest thing we can. Like we'll call there's one thing we used to say, it's like me, Josh, and Raj, we chase the monkey. Basically, you get into a trade and just keep adding until it works in your favor. And it never worked. Like you could have $1 million accounts and it just would not work for you because the market is just gonna keep going against you. And just do crazy stuff like that on stream and just see if people would actually watch it.
That's classic hedge fund versus GME. Because that's essentially what they did. And how many of them went out of business? Yeah.
A lot. That was such a mess.
Some of them were like $1 billion hedge funds. Yeah. Just to put that into perspective, not $1 million, billion.
And that's a bias. They had a bias. They're like, there's no way retail's going to push us out of this. We can hold this forever. We can have plenty of margin. And then what happened? Yeah. Yep. You don't know what's going to happen. So never get so confident.
Yeah. And that's the thing. It's like it worked for them for forever, right? On every other stock, but it only takes one.
It really only takes one. Cool. Let's get some questions. I need to get in the other screen real quick.
What would you do if your best setup fails fully? I have it set. I would just hit my max loss on the day. There's really not, or are you asking, like, what if it just stops working? Like I said, I've been watching the screens for 6 years, and I've only been trading futures for coming up on 2 years total now. But I've noticed just in my back testing as well as staring at the screens for the last almost 2 years that, it seems like this is what happens. The market moves in waves, and even in stocks, the reason I came from stocks, people ask me all the time, well, if it was working in stocks, why'd you leave? Is the opportunities. It was like the seasons of what I was trading. It was like everyone kind of started doing what I was doing and just kind of disappeared. It just wasn't there. It still happens because I have a buddy that's still doing it on the stock side or equities, whatever you want to call it. But it's just far and few, in between. Like it doesn't happen as often. There was days I would get 10 to 15 plays, and then it started to dwindle down to 5 to 7, and then it started to go to 2 to 3, and then before you know it, I go a week without even taking a trade, and it's like, all right, well, I need to find a way to make money. And then that was actually when I just was like, well, let me go see if I can apply this to futures, and then the rest is history.
Super nice, because in futures you can go both long and short. It doesn't matter. You don't need locates. You don't need anything. You're just like, yeah, I can go short right here, or I can go long right here. And overall, there's plenty of moves. Like really, you can trade anything as long as there's volatility. And if you have volatility, you can trade it. So this same strategy, you could go and look at NQ. You could look at ES. You could look at CL, but just make sure you back test it. And like he's saying, is he back tested for 10 years, meaning this has worked for the last 10 years, right?
Yep.
This is a trading setup that actually works. Yes, it's super simple, but simple is usually what makes money. Like you don't need to overcomplicate things. So I would definitely recommend people take this strategy, back test it, look at it, check it for yourself. This is a working strategy, and then work on what's really hard in trading, which isn't the strategy. It's your psychology. It's making sure you follow through. You only take the trades that are actually trades, and you let the winners win and you let the losers lose. Like, it is what it is. Like, you don't have control over it. Once you enter the trade, you can't do anything else. And this is a very simple system to let you know if you're actually doing it the right way or the wrong way, which is great. Yeah, so here's some questions. All you, Vala.
My biggest problem in trading was oversizing and letting my red days be too far. The base hits on the futures desk has forced me to size down. So far, it's helped me a lot, and the risk settings are mega. I don't think that was a question. It was more of a compliment to you guys.
Oh, thank you. Thanks for reading that off. Appreciate it.
As I was reading it, I was going to tell you to set a max daily loss, but it looks like you kind of were forced to. So it worked out. How to decide the amount of your max loss? That's a very good question. So how I decided mine is I would take my normal, like I would take an average winning day. Now keep in mind, I don't take this the wrong way, but I haven't kept a journal in quite some time. Like, I know that some props, like, they kind of auto keep it for you, especially like the futures desk. So you can go back and like look at your days and you can kind of look at the trades, etc. So I've kind of depended on that. Like, if I ever wanted to go back and look at something, but early on when I first started, I would handwrite my trades down and everything so that I could be like, all right, I took this trade. And it's just the old school for me. You know, I'm getting kind of old. I'm going to be 40 in 17 days. But one of the things that I learned growing up in life is if you just kind of copy paste something from your browser and you just kind of put it into your journal, et cetera, you don't really like apprehend it as much or comprehend it as much. Like, you don't really take it in. And I found that, like, if you just take a piece of paper or, you know, just grab a journal, a notebook, whatever, and every trade that you take, as long as you're not taking 50 trades a day, right? Like, I'm only taking, 3 to 5 trades a day, probably. I'll go back and I'll look at the chart at the end of the day. And this is what I used to do. And I'll draw the chart. I'll draw my entry. I'll write why I got in, what I was expecting it to do, what I was going to do if it went against me, what I was going to do if it went for me, like where was my take profit. And I would do that for every single trade. And I did it for probably the first 5 months until I really started to feel comfortable. And then you can kind of start, go into an online journal and you can kind of start doing the same thing. But let me full circle here. How does that get into what your max loss is? I had all these stats, right? I knew exactly what I was making every single day, every single trade, what I was losing when I was losing. There was several blown accounts in there, which, again, that's still an amount, right? That's a dollar amount that you can put down as a loss. And so what you would do is you take your average winner, and you can really do this yourself. Your win rate, right? Because over a very long course of time, you'll figure out your win rate as well. And you just have to make sure you can do it really easily. So let's say your win rate is 70%. So that means if you're making $100 every trade, that you would have to, that's $700 over the course of 10 trades. That means on your 3 losers, you can't lose more than $700 because then you're not profitable, right? And now keep in mind, you got to think of commissions, fees, et cetera, if you want to go down that route. But so you essentially have to figure out what your average win rate is, how much you make on an average trade. And then as simple as I can make it is you kind of put it into the laws of 10 there. So again, $700 if you're making $100 a trade. So let's say you're making $200 a trade, then it would be $1,400 over the course of 7 trades. But how much are you willing to lose? Is your strategy a 1-to-1? Is it a 2-to-1? It's really just math. So you want to make sure you're not losing more than you're winning. And the easiest way to do that is over 10 trades, but you can do it over 100 if you really want to kind of fine tune it, or even 1,000, right? I mean, because a lot of people don't understand, if you're going to look to make this a career, a lot of people are here to just make money quick, but a lot of us that are actually here to trade for a living, like, you're going to make tens of thousands of trades, right? So what is one trade? And a lot of people don't understand that, especially the hedge funds with GME kind of thing. Like, never let one trade destroy you. You should always have a max loss set in place so that you will never hit, that breaking point. So if you can figure out what that is just based off of pure math, then you're good. But it requires you to kind of trade your system a little bit before you know that amount, unfortunately. But that's where paper trading comes in. That's where demo trading comes in. It's where you could just back test and kind of go through. I mean, it's kind of like demo trading as well, just by doing it that way. But it's really, it's just math. So like for me, my win rate is a little bit higher. I know over here it says this is 72, but I will say that on the evals, I go a little bit more aggressive, so I'll take more losses. But on all my funded accounts, I'd say my win rate is somewhere in the 90% range. So that means if I'm making, $900 every 10 trades, but I'm losing, let's just say 500 on the one trade out of 10 that I lose, I'm profitable, right? I'm $400 in the green. And that's the goal, right? That's where your profit factor comes into play. What is your gross profit over your gross loss? Are you green or are you red? That's what a max loss should be there for. Make sure that you're never losing more than you're making. I don't really know a better way to describe it. I think I described it fairly well. It's really just a matter of fitting it into your system. And that number can be different for everybody. Are you more risky or are you more risk adverse? Some people, when they're trading a 2-to-1 system, their one could be a lot smaller than yours, right? So that's all just numbers. It doesn't really matter if you're one person's $100 could be one person's $500 or $1,000. Like that shouldn't matter. It's all based on what you're trading and how you interpret your win percentage versus your overall wins or your overall losses. Sorry.
Yeah, and I'll kind of touch on it too. So there's two different strategies, right? And you're going to employ different strategies for risk based on what you're trying to achieve. So during an assessment, you're going to be more on the edge of being riskier, right? So you're going to be risking a larger portion of your actual capital, right? And that's where you need to start to look at first is like, how big is your account first? So let's say you have a $1,000 account, just to make it super simple. That's your drawdown amount, right? And I can tell you based on data, because we're data driven, right? If you're above 20% of your total account risk per day, meaning you could lose $200 of the $1,000, you're in a better position than somebody that's risking 40% of their account. If they're risking 40% of their account, that account's going to be gone in 2 days, right? So you really want to start. One, most of the people that are trading here are probably trading at firms, right? So look at your total risk capital, not the size of your account, not any of that. How much capital do you have to risk? If it's $1,000, then be below 20%. If it's $6,000, 20%, right? Use a percentage of that total capital. And then once you get into the brokerage, I can tell you if you're risking 20%, you're a lot more risky than somebody that's risking 10% of their total capital per day, right? So 10% is I know it's minimal, but your overall goal should be around 2% of your total account, which I know that doesn't work in sim. I know it doesn't work for most of these prop firms, but that's where you want to get to. Because look, even at a 70% win rate, you have a 90% plus of having 7 losers in a row. Let that sit in. Like, most people are risking 40% of their account one day, and you can have 7 losses in a row with a 70%, not including emotional issues, not including your psychology, not including just mishaps or market volatility or overhead, like headline risk, right? So really look at risk first and understand how big is my account? How much can I risk per day based on how much runway I need, based on what's my win rate, right? So take all that math and do the math and figure out what you should be risking per day. Because a lot of people, what they do, and we have the data for this, they will risk way too much money and they'll purely rely on luck to get through. And I can tell you the guys that are really successful in our brokerage accounts are all risking below 20% of their total capital. And that's too much. But a lot of the guys, once they build a buffer, they're risking more like 10%, because look, 10 trading days in a row statistically is a lot lower than maybe 2 or 3 losing days in a row. And you got to look at your runway. Most people never look at their runway in trading. They're trying to take off like a Boeing 747 off like an aircraft carrier. It's like it's not going to happen unless you get really lucky, right? You need the runway. So think about risk in that way. Sorry I got long-winded, but I'm really passionate about risk. We meet with hundreds of traders that get transitioned to live. We have data probably for 17,000 traders now. So we have a lot of data, and I love data, and I can tell you stay below 20% total risk per day. And that's a really safe number. You see a lot better success at those rates. So use that to start off. Once you get into the brokerage, get to 10%. Optimal is 2%. That's what you should risk per day. And that's really what's going to give you long-term sustainability and consistency.
Yeah, Brian, you definitely went at that at a way that I totally kind of just completely forgot about. When I used to trade stocks, that was the main thing, right? Because I had to figure out what sizing I was going to use in each of my trades, because each ticker was a different price. So it was always a battle of how do I figure out the right sizing? And that was exactly how I did it. I would never risk more than 5% of my account on any given trade. That was always like my max loss. And so I would do the math. I actually had hot buttons do the math for me, but I would have hot buttons that basically took my total account and it would multiply it by 5%, and then that's how I knew it would give me the share size that I could use for that particular stock based on the current price it was at. And I honestly, ever since I came over to futures, it's been a little, I didn't even really think about that. That's actually a really good point, that in order to get correct sizing, you really should be looking at your overall account size, and especially with the prop firms, the amount of drawdown that they give you. Because in reality, the drawdown that you're getting from these accounts is actually the amount that you have in the account, essentially, right? So like say, I'm just throwing out an example. I don't know exactly what yours are, Brian, off the top of my head, but say like a 50K account, that's what a lot of people generalize as like the median around the prop firm industry. They'll usually have like 2,000-ish in drawdown. It's not $50,000 account. It's a $2,000 account. And what a lot of people don't understand is that's what you should be basing your risk off of, not 50,000. You should be basing it off 2,000. And if I'm not mistaken, 2,000 out of 50,000 is close to that like 5% area, or it's like 5 or 6% maybe. So that is generally the thought process behind the drawdown with prop firms, right? If they want you to succeed, they want you to keep your risk within that 5 to 6%. At least this is kind of how I took it when I first came into the props.
Depends on what prop firm, right? So
look
at the structure of the prop firm. And if they're saying, oh, $50,000 account, and they're giving you like 10 minis and not enough, or letting you trade that full amount in one day, do you think they want your long-term success? No, they want you to blow up, right? And before you can get a payout, you blow up. We, from day one, it's like, no, a 50K account isn't a 50K account. This is your drawdown. And your margins are equal to 50K, meaning if you wanted to trade this size, let's say 6 contracts in queue, actually, let's do 2 contracts in queue. 2 contracts in queue, $33,000 per contract. That's $66,000 account, right? Just for 2 contracts. So we could list it as, oh yeah, we have a 60K account, blah, blah, but it's not. It's like, no, you have 2K to play with. That's your drawdown amount. So we thought, like, for clarity's sake, like, let's just do it the right way. And for structure, like, let's give the guardrails people are missing. Let's make them have like 100%. They have to have a stop loss where they can't blow an account in one day, because it doesn't help them as a trader. And that's what guided us as a company. And hopefully more and more people realize that and start seeing the benefits of sizing down, thinking about margins, not so much as like account size and all that other stuff, but thinking about, okay, well, if I have $300 in risk, then maybe I shouldn't risk more than 3 micros, like $100 per 1 micro. And if I'm going to risk a mini, then I better have at least 1,000 in the account, right? That's kind of the best ratio that we found. And this is through data. We don't just make stuff up. We don't just talk about numbers off the top of our heads. We have the data to back it up. It's like, no, if you do this, you have better results. If you do this, you pass. If you do your daily check-in, you actually have a better win rate. If it's all like driven by actual data. How do we get people to be better? And that's really what we're trying to do as a company. All right, let's go on to more questions. What else do we have? I know we spent a lot of time on that one. Yeah. Yeah. Yes, go ahead, participate. How many likes we got? Can anybody tell me how many likes we got? Anyone? That one's you can answer that one. Will it make me Lamborghini money?
You got 87 likes.
Okay, 87 likes. Will it make him Lamborghini money? That's his question.
Zishan, he's from my stream. It can. Simple answer. I mean, it's not that it can't. It can.
It can, but it can also lose you that money as well.
It could, yeah.
Wow, that is a...
How long will you be... put down the alcohol, sir.
or fix your keyboard, one of the two.
Yeah,
probably another 10 minutes. Another 10 minutes. We don't like to stay around too long. Ooh, yeah, there's some good questions here.
As we just thought about.
It said get funded if 30-day metrics are above certain trading metrics.
That one's for you.
Without PT? What's PT? I don't. Profit so target. It has, profit target, but instead get funded in 30 days. Metrics are above certain. So we will skip people depending on their performance. I can tell you most people think their performance is a lot better than it is. What we really look for is consistency over a certain amount of time period, like 2 weeks, 3 weeks, with risk being in check, right? So a lot of times people will submit it and they'll be like risking 40% of their account in a day. It's like, dude, that doesn't work. It can work to get you through the assessment, but it doesn't work in the brokerage. So if somebody's risking like 15 to 20%, has consistency, I can tell we just skipped somebody the other day, maybe a couple days ago. And we skipped them because they had been in it for like 60 days. Their consistency was great. Their risk was really great. And that's all we cared about. It's like, you have good risk. You're worth the risk on our side. We're going to put you in a brokerage and have you attack the brokerage. Like, our goal is to make money in the brokerage, unlike these other firms. Like, we want you to succeed, but we know what actually works. So it's like, we're not going to build these assessments that cater to gambling. Like that doesn't get us anywhere in the brokerage. So that's really our main focus, is like, how do we have all these rules and these guidelines that actually help people that actually perform in the assessment, or not the assessment, I'm sorry, the brokerage. What else we got? Quick question. What happens if I go past the 12 days for base hits? So it depends. So here's what a lot of people get stuck in. They will risk too much of their account, 40%, and then they can only make a certain amount, let's say 20%. So they get stuck in a cycle. Yeah, Vola. They get stuck in a cycle because they're only making 20, but they're risking 40, right? It's an inverse risk reward ratio. So what you need to do, if you're having struggles getting past in the appropriate time, or the time that's listed, minimize your risk. Like, instead of risking 40%, relying on an emergency stop, decrease your stop to 20%, and then you're matching your stuff 1-to-1, and you'll pass right away. Like, you'll pass in the days. What else we got? Any more for Valhalla? Tried the martingale strategy. I have not.
That's just Zishan trolling.
Oh, yeah, of course we support Sierra. We also support Denali, and then their order routing. We can do all that through brokerage. Well, thank you. Appreciate it.
LSJN's got a good one there.
Oh. We'll both answer this one.
Yeah. You want to go first?
Yeah, so longest losing. So understand, I trade multiple strategies. My longest losing streak, and I'll tell you why it was so rough, was on inbalance pullback. So inbalance pullback has basically a 42% win rate with a 5-hour return. I went a month and a half with not one winner. And what's tough about that is you don't get one of those setups every day, because the inbalance pullback is very similar to kind of what he's doing. He's fading the Kelner channel. Well, inbalance pullback is when you get high enough like volatility in a particular direction, it's indicating a trend. So it gets up to the +2, pulls back to the +1. You get in at the +1. I get in based on triggers, usually order flow signals. I will get in then, and then I'll write it back to the +2, right? So instead of looking for a full fade, I'm looking for continuation. That's the trade, right? So because of that low win rate, I don't even know how many losses I had, but when I finally caught that trade, the one that actually worked, do you think I held all the way to 5R? No, I was like, oh my God, it's working. And I got out at like 3R, and it's like, then it did nothing for me really, right? If I would have held the full 5R, it would have at least paid back some of those trades, but it didn't, because I got out too early because of my emotions, right? Very, very typical. But super tough. What do you got? How many losers in a row have you had? 90% win rate. You probably haven't experienced much.
Yeah, with my strat, it's tough to go on a huge losing streak, but I'll never forget back when I was in equities, we were just going through a stage where like I don't want to call them penny stocks, because I was trading anywhere between, like dollar stocks were actually pretty rare that I trade. I'd say anywhere between like $3-ish to like, $40, $50 is kind of what I was looking for. But I'll never forget that there was just it was like a couple weeks where literally everything that started to go just would not come down. Like typically that rubber band that you're looking for, like you would get it, but it wouldn't come back as far as it usually was. And I was always trying to get as much out of it as I could. And it's not that I would lose, because a lot of these, like once it goes far enough in my favor, I'll always put a stop at break even. So a lot of my trades ended up break even. But every once in a while you'd run into one where I would, it would continue through my first entry, and then I would have to try to, part of my strategy is I will scale into a trade if I have to, like I said, to a certain extent. But then it would come down and like kind of bounce off my average instead of like going that little bit below it so that I could, start to scale back out. And it was very frustrating. But once it comes back down to my average, I would put a stop at that current high. And a lot of times it would come up and hit it. And I want to say it was like a week and a half or so where it was just like everything that moved, it just did that. Like it just would not come back as far as I was used to. Right. And edges do change, right? Just because you're getting one thing one month doesn't mean it's going to be there the next month. And that's why a lot of people, COVID, I'll pop this up real quick. How many people did you see came in and hit the buy button during COVID times, and they were making YouTube channels and buying Lamborghinis?
Yeah. Just printing money. All you had to do is go long.
Yeah.
All you had to do was go long.
Where are they now? Do you see any of those guys anymore? They were like, oh, this stuff's easy. Like I just started trading during COVID. Like, I'm going to do this the rest of my life. I can't tell you any of them that I've seen around lately and what they're doing. They're just not around. So it's like something can work for a short period of time and it makes you look like a genius, but being able to adapt and being able to figure out what's actually happening. Why is it not working now? What am I going to do? And I just remember that week and a half, it did that. And then I actually started I traded the same way, but I would go for less profit. I was like, I'm a scale down in size. So I actually started taking 50% size because I was losing, right? That's kind of something you should get your brain. A lot of people think opposite. I lost, I should martingale, right? I can win it back on the next trade. No, if anything, if you continue to lose, you should be like, all right, maybe I shouldn't be risking as much money as I am. Maybe I should downsize until I figure out what's going on, because then it takes the emotion of the money out a little bit as well. And that's the whole other side of trading, is your emotions and the psychological side of things. But so I continued to trade. I just took about half size. I started looking for less of the move. And then how I got back into normal trading is I noticed that when I was taking my profits, looking for lesser of the move, it would continue down to where I was previously getting my fills. And then when that started to pick back up, and it was, business back to normal, I sized back up. I still only looked for like half of what I was looking for before. It continued to keep going past there. Okay, I can start pushing it, go to like 3/4 or even back to what you were doing before. And it's a cycle. It's like, again, like when you start losing, your brain shouldn't go, how do I make my money back? It should be, how do I protect myself from losing more than I should? Like that's what your brain should be thinking of.
It should, but it doesn't. Yeah. And I can tell you from, all the traders I've talked to, and it's just hundreds and hundreds and hundreds of traders, plus all the data we have, it doesn't, because human nature and your immediate reaction is, how do I get this money back? That's literally what you do, is like, how do I get this money back? How do I recover from this? And you don't. You just end up hurting yourself more. Okay, what other questions we got? What do we got, Raj?
What are the top 3 things you struggled with most once you got profitable and take it to the next level? That's actually a really good question too. For me, I know the one thing was scaling for me. Like once I figured out that I was profitable, I wasn't making that much. I was making maybe $100 a trade back in the day, or $100 a day. Sorry. So I was making like $30-$40 a trade, and I wanted to be able to take that to the next level. Like, how can I, actually start to turn this into a career? So I want to get this up to like $300 a day and then $500 a day. And it's really hard. And I really struggled with this because you get so comfortable trading a certain size that when you try to like say double that size or even go like 150% of the size, like just going up in size, when you finally have a trade go against you, when you up your size and you see that red number that is so much bigger than what you're used to, it's such an emotional battle to deal with that. And I would say I'd have to think of 2 other things, but that one always pops into my head, is that was the biggest thing I struggled with. And I actually had my brother 3D print this for me because of that. This was like one of the, let me see if I can get my face out of here. Oh, is it backwards on the screen?
No, it's perfect. Do it scared. Thumbs up.
So the meaning behind that is, and I have it sitting on my desk so I can stare at it every day, is anytime that you're not confident that something is actually going to work, you might have to, well, something's happening in the market, or just a little bit of a run. But you have to do it scared, because you know in the back of your head that this should work, right? You've proven to yourself that this system works with the numbers that you've been running. So just by changing the amount that you're going for, that you're scaling into, shouldn't change anything, right? Especially in like a sim fund, a sim environment, it shouldn't change anything. And even in a real market environment, it shouldn't really change anything for the size that we're trading. I mean, if you're trading, 20, 50 contracts or something like that, maybe that would affect it. But for us, it's like just that mental approach of seeing bigger numbers. When I was finally profitable and trying to scale up to a bigger size, that really, I want to say that took me 2 years to really kind of like mentally get through that. And some people don't understand that's a real struggle, because I wasn't trading prop firms back then. I was trading my own money, like my own real money. So it's like a lot of people that don't have their own brokerage accounts, they don't understand that, especially a lot of people that the first thing they're doing with trading is prop firms. Like to them, it's like, oh, I lose an account. It was only what I paid for it. Well, when it's your own money, you look at it a lot differently. and that's when people get deer in headlights even more, because it's like when you really realize when you're in a big red trade and it's your real money, you're like, well, I'm not hitting the button.
I don't have to accept this. It can go the other way.
That's unrealized. Right?
I've had that moment where you're like in a trade and you're like, I need to get out. And you can't click to get out, and you just watch it. And then it gets worse and worse. And you're like, oh my God. And then finally you click to get out, and you're like, you get paralyzed. It's crazy that those things can happen. All right.
Raj, is it 408? Am I seeing this right? I'm just double checking with Raj real quick. Make sure I copied or didn't like double paste it. Yes. Okay. Just making sure. No, it's fine. I just want to make sure. But no, that's a good question. I'd have to think of 2 others, but that's definitely one that popped into my head.
Oh, well, if you guys can't hear my crazy dogs in the background, they are barking right now.
But we're all used to it. Not you specifically, but who doesn't love hearing some cute dogs bark? Right, let me present this. I would, while I'm just doing this, if I'm thinking of a second one, it would have to be really just the confidence in myself as well. Knowing that what I'm looking at on the chart is what I think it is. Because a lot of people, they'll see something and they'll be like, I should have took that trade. Well, being able to have the confidence in yourself when you see your setup, fear of clicking the button, a lot of people say fear of missing out is a big thing. Well, fear of like actually getting into the trade is a big thing for a lot of people. And I know it was for me too. And again, this stems back to it, to me, it was real money. I didn't want to lose my money, and every time I got into a trade, I knew I was risking my money, right? That's part of trading. And the fear of getting over that, as well as just being able to click the button when you see your setup, that is such a big thing that a lot of people have trouble with. And, I sympathize with that. That would probably be the second one of my 3 for sure.
Yeah, I had that problem as well. And what would be so frustrating for me is I would delay on like 1 or 2 setups. I'd be like, oh, I see this setup and I'm like, I don't click it. And then I miss it. I'm like, man, I missed that trade. And then I would do it again. And then I would take the third one, and guess what? The third one wouldn't work. Yeah, so I'm like, what? Like, all I got to do is trade the first 2, and the third wouldn't have mattered. And it's like, no, I always did that, man. I would like hesitate on the first 2 trades, especially early, because I was trading my own money. I started in equities like you. So I'd always hesitate on the first trades. And then finally, when I was like, okay, I'm going to do it this time, guys, to myself, I click it, and then it's a loser every time, bro. It's
like the market's failed. Way of analyze.
Yeah, it's like that's what you get. Don't hesitate, bro. Click.
Yep. I was really hoping to take a trade while we were on the stream, but it just never really gave it to me. It looked like we were setting up for one to the downside there, but didn't quite get there. It would have been the perfect thing we were talking about too. We were right at the 900 level, a whole $1. Was hoping for the big push down through, and we just didn't quite get
They
there.
call it the century number, right? Is that what it is? Century number.
I mean, yeah, that
whole
would
half.
make sense. Yeah, I call it whole half just because I came from equities, but
yeah, it's easy. From your back end data, what is the average amount of trades a profitable trader takes, and what about 4 or below? 100% 4 or below. As soon as you start getting into 4 and above, the data is so random and all over the place. Your win rate sometimes might actually increase, but how much you actually make decreases a lot. And it makes sense because look, people that take more trades, they're not trading their actual setup, they're trading for outcomes. They want a specific outcome, right? And we start doing that, you might have a higher win rate, but you're not actually trading your system, and your wins are smaller, your losses are bigger, so you're making less money overall, right? And then on the flip side, people that and I see this every day because I'm always looking at, before we move a trader to funded, we talk with them and we do a risk meeting and really try to set them up for success, right? So when I look at their data and I'm seeing, hey, it's 3 or below or 4 below trades, I'm like, yeah, this guy's solid. He's gonna have a good transition. Anybody over that threshold, that's when you're probably not even trading a setup and you're just trading whatever. You're trading for outcomes instead of trading your actual setups. So 4 or below, that's the magic number. Let's do the giveaway. What is this? What is this thing? What is this, Raj?
This is me. I'm in.
Oh,
this is what I run on my. I do all my giveaways via marbles. So what you're seeing up here is a bunch of marbles, and then they race down this track. The first.
That's actually okay. Okay, stepping up. Yeah. All right, I like it. Let's do it.
All right, you ready? There's 408 marbles on here. Let's do it. Here we go.
Ooh, that guy jumped out of the lead.
So you're going to find out real quick. So the reason I picked this track is because it's chaos. You'll see.
Oh, okay. Are people getting blown up and stuff right now?
Oh yeah. Oh yeah.
This is actually pretty cool. This makes it actually fun. All right.
So yeah, on the right side,
a lot of people
that got pieced out. Yep.
Ooh, look at Cash. Is that Cat? What is that?
Yeah,
Cache. Well, why is he going backwards? Yeah. Where are you going, bro?
So the barrels and those, I call them comets, they'll come down and they can make you go backwards. It's complete chaos. You can also, in this stage too, you can get blown off the track as well. And once these barrels start collecting, it's just crazy. So if you're in the lead, don't think anything of it. Not until you're at the end. Yeah.
Oh, this
is
there's
cool. Only 258 people out of 408, 257. Oh, yeah, look at all these people dying. It's still catching up. There were so many people that died. Oh, Kneat.
Ooh, is he going to get through? Is that our first guy? Come on.
So see up top, see how all these are like broken going across like the bridges?
Yeah.
Oh, no, he's going back. The one at the end is not. So that's how you know it's the end. See how the one at the end there is like full there? Yeah.
Got it.
But he's still got to get there. He's got a big lead though.
He's got a huge lead. I don't know. He's oh, okay. That like beam actually starts pushing him forward again.
Yeah, the red beam does. Yeah.
Ooh, that bomb didn't. Oh, no. He's going backwards.
Oh. And at the end too, I think they have it rigged so that the comets come in a little bit faster. So like right when you're at the end, it tries to blow you off, and it like right. Oh, here we go. Let's see one.
Just like trading. You're like almost there, and it's like nah. You're
all
not
he,
there,
all he has to do is make it down here. All he has to do. Oh, that was actually good. Oh,
no,
just like that. Just like that. Yep.
Could you imagine being one of the guys on here in the name, and you're like, yeah, I'm gonna make it. It's like nope.
You think you're about to win, and then see it.
Nope. Market's gonna come smoke you, bro. You're not winning anything.
We got another chance. Yeah, they went too far. Oh, that was good. All you gotta do is fall down in there. Oh no! Oh, we got another shot. Get in there. Get in there. Yes.
Got it.
Got a winner. Muad Shadley? It's an L-I at the end. I thought it was I-L. Let's go. How many winners do we got, Raj? Is it just one?
We can
really discuss that.
We can do two. everybody else is going to win too, because everybody's going to get credit. So let's do 2.
Right.
So go ahead and rebutcher those names.
Oh, you just want to give it to the first and came in second? Or you
Yeah, first and second. I think that's the most fair, right? First and
yeah, of course. Unless you specify otherwise, beforehand. Some people like doing first and last, or they'll just pick like first and 10th, or
no. We'll do first and second. I think that.
All right, so Muad and Radu. Congrats.
All right, congrats. I think we're right at an hour 10. Let's go ahead and wrap it up. So
sounds good.
We don't take up too much people's time. We do have the 60% sale. It is ongoing for until Friday, I think. So make sure you sign up. Cool. Big sale. And other than that, thank you so much for joining us. He streams all the time, so catch him on his stream. Really appreciate it. We'll see you guys next Wednesday. Thanks, guys.
Sounds good. See you guys.
Peace.